Good afternoon, everyone, and thank you very much for the invitation to come and speak here. So I'm going to talk about the competitiveness of Australia as a source of grain exports. So let's start a bit with the type of exports that Australia has been making over the last few years. So this is the last 7 years on this graph, and you can see that Australia on average has exported about 21 million tonnes. Australia actually produces about 3% of total world production of wheat, which is somewhere in the 650 to 675 million tonnes. So it's a relatively small producer, but way out of step and much higher representation in the export market, with about 16-17% of total world exports. So you can see it's a very big player and very competitive. It has been over time. Having said that, when you look at actual yield, Australia is certainly not the most competitive. And so world yield trends at somewhere along 3 tonnes per hectare. Australia is quite a bit below that, much closer to Russia. US, interestingly enough, trends almost exactly on the same as the world. Interestingly, so does India. And China is actually above, but that's largely due to double cropping. And then you've got countries like France and also Germany that are way up at the top at around 7 tonnes. Now, the but against that, and the good news is that Australia, obviously the quality is much higher, and so Australia has been, and needs to continue to be recognised as a very strong quality producer, both in the colour, the milling properties, and the cleanliness. So that's the advantage that we have here, but the yield actually is quite a little bit below world average. So that's a little bit on present and past, but when we think about what's going to happen in the future and what's going to make the difference about whether particular origins are more competitive than others, there are quite a few things that are really changing in the world, some of which have been touched on in the various presentations today. But as we think about some of the themes, one, the Asia century that everyone's talking about, and so this shift in the centres of economic growth. Partly as a result of that, there's a lot more focus on food security. And so as you see countries growing and developing, they're a lot more concerned about making sure that they can actually feed their populations. And so food security keeps coming up. That then brings back the challenge to the origins to manage those supply chains properly. And then a slightly different theme is the theme of interdependent markets. And so where grain markets used to be really run and the prices moved on the fundamentals of wheat, that actually is no longer true. They're very interdependent with other commodities and other markets, and that's one of the reasons why we get a lot of volatility. And then the last theme that I'd like to talk about is about consumers. There really is a change in the way that people look at their diets and what they expect out of their food, and that's something that I think is going to continue and grow as we go forward. So those are the themes I want to talk a little bit more about today. So we start with the centres of economic activity shifting. And so it is very clear that as time goes on that the population is growing, and where that population is changing. And so the estimations are that by 2020, about 50% of the world's population is going to be on the North Shore of Australia. So that's a very exciting opportunity. It also brings challenges, but certainly the geographic direction is fairly clear. It's also clear that it's going to be very urbanized. And so what this graph says is if you look at the emerging cities, the top 440 emerging cities in 2010 were only responsible for 18% of the growth in GDP. By the time we get from 2010 to 2025, they're going to be responsible for 47%. So there really is a massive shift in where the growth is coming in the world, urbanized and largely in Asia. Now, when we talk about the Asian century, pretty much the very next sentence that anyone says is that, wow, this is great for Australia and what an advantage it's going to be. And it is, and there's some good news here, but it's not as good as you might think, and it also shifts a lot more than you might think. And so I want to talk a little bit about freight rates and how they change and how much advantage we really have. And so if you take a boat of wheat from Kwinana to Jakarta, which is a fairly average trade flow, Indonesia is the biggest importer of Australian wheat. So that West Australia to Jakarta trade flow is a fairly typical one. Today, that would cost you about $17 per metric ton in freight. In 2008, that exact same ship, exact same quantity, exact same route would have cost you $55 a metric ton. So the price of freight is as, or in percentage terms, actually more volatile than the price of wheat itself. Wheat markets obviously go on supply and demand, well, so do freight markets. And so the supply in the case of freight is about how many new ships you've got being built versus old ones being retired and sent to scrap, versus the demand, obviously, for bulk goods to be moved around the world. But you can see that change. You can also see the change, therefore, in the spread versus Vancouver, which are the numbers in red. And so in 2008, that was 85, and today that's 27. So in 2008, before the global financial crisis, when you had a time of high economic boom, there was a $30 advantage for Australia against Canada to move a ship into Indonesia. Today, that is only $10. And when we start talking about the supply chain piece, you'll see that that $10 disappears and is actually, for most places, becomes negative here in Australia. So that geographic advantage is there. It clearly is much shorter time to sail to Indonesia from here than it is from Vancouver. It's about 7 days from here, and it's 15, 16 days from Canada. Nonetheless, today, when you've got low freight rates, that advantage is only $10. So it is a moving target. So when we think about the supply chain, and this is probably it's the toughest piece I have to say today, in the sense that Australia really is not competitive in the supply chain. And what that ultimately means, the price back to the grower goes down. And so if you take Australia as a whole, and so I'm not really talking about WA here, there is a big component also of the east and the south, but it takes, in many cases, $70 to $80 to actually get grain from farm through the storage to the port and fobbed onto an ocean-going ship. Many other origins can do that for 15 to 20, maybe a bit more less. In some cases, it might be $25 less. And so when you think of the road, the rail, and the fobbing, because it's also about the port costs, Australia is probably one of the highest cost origins in the world. So part of that is about rail. There needs to be more investment in rail, both the under rail and the over rail, and just getting more efficient about the way that we use the rail, determining how and when we use road versus rail. It also is about the ports. And so the current allocation of shipping slot systems that we have in the west, the south, and the east is not terribly efficient. The bulk handlers themselves say this, and I understand, I wasn't able to listen to Colin's presentation, but I understand that, from CBH that he talked about this. And so that the way that we actually get grain onto the boat and the allocation of those shipping slots is not terribly effective. We've also got the problem of the currency. And so this is a study that HSBC produced last week. And it shows the most undervalued currencies all the way up to the most overvalued. Australia came in at number one. Number one. Now, this was a it's an objective study because it was done putting together 3 different metrics and pulling them together. It was the HSBC analysis and the way that they did that. But the most overvalued currency in the world is the way that they looked at it. And even if you don't accept that it's the most overvalued, it's still way up there. I think we can all accept that. And what that does, it just puts a lot more costs into the system when you're looking at labor, manufacturing costs, just moving things around. And so again, Australia can still be competitive as an origin, but what it does is it brings back down the price ex-farm, and it's the pockets of the growers that suffer through this. So it is something that is not an easy thing to solve and is unlikely to get solved in the very short-term future, but nonetheless, it is something that is making Australia extremely uncompetitive for exports. Going back to just that last little quadrant there, we've got a nice piece of red tape. Actually, in many ways, the regulations here in Australia, they feel pretty heavy at some times, but they aren't that bad compared to many other countries. And so when you look at South America or parts of Eastern Europe, the red tape there can be extremely difficult. But nonetheless, we've gone through partial deregulation here in Australia. We're not yet fully deregulated, particularly around the port access. And so until we clear some of that out and some other things around quality and all the things that we are reporting on, there are opportunities to improve here, even though, as I say, it's relatively not so bad. So switching gears slightly, this is a chart of the Chicago Board of Trade wheat futures in cents per bushel, and it goes back to 1980. And you can see that by and large, for 20 years from 1980 to 2000, the market had dips and peaks, it did move around, but it relatively stayed in more or less the same range and was fairly close to $4 per bushel, give or take. And then we see this massive move up in volatility, a lot more volatility, and overall much higher prices. And so the question is, where does this volatility come from? And is it something that's going to continue into the future? And what do we do about it? Well, it comes from a number of things. But part of it has to do with the fact that commodities become a lot more interdependent. And so where wheat markets really were around how much wheat was being produced versus how much wheat was needed in the world, now commodities have become linked. And so people who were wheat traders would never look at the price of petroleum, never really cared about the price of sugar. Now you have to, because wheat is linked to corn, is linked to soya. Those are all linked to biofuel, either through ethanol or through biodiesel, linked to the price of energy. And there's a lot of financial analysts who are looking at commodities as one big basket and will either buy commodities as a basket or sell commodities as a basket. And so you've got these interdependent commodities, which is then causing part of this volatility that we need to manage. The added complexity here in Australia is that the Chicago Board of Trade is not a good hedging mechanism for Australian wheat because it really is a local market. And so if the ASX could actually get going, it would be a much better way to help manage price volatility here and use as a hedge, because Chicago Board of Trade, which is the biggest international wheat futures market, but it really isn't always correlated that strongly with the local markets here. I've got another graph here which shows two indices. One is the S&P 500 from the US, and one is the CRB, which is a commodity index. So it was created to allow people, instead of having to, if they wanted to trade commodities as a basket, they didn't have to go out and buy wheat and soya and gold and tin or whatever, coal or everything else they wanted to. It puts it all together into an index. You just buy the index. Now you can see that going back to 2000, there have been times of very strong correlation between the S&P and the commodity index, and times of very low correlation. Well, the good or the bad news, depending how you look at it, is that there are fund managers who like trading this both when it's correlated and when it's not. And this, again, is why we get some of this volatility. And so what's happening today is that when it's not correlated, then they start to see commodities as a hedge against inflation. And so you can buy equities, maybe you're in a high inflation environment, but they don't like being too long equities because they're worried that the equities will do badly in high inflation. That's when you buy commodities, because commodities, in theory, do better as inflation goes higher, because the price of commodities will go up in line with economic demand. And so when they're decorrelated, people are interested as a hedge against inflation. When they're linked, it's a way of leveraging the bet. And so different people, for different reasons, start to buy commodities as an index. If you look at the top 400 managed money funds that play in commodities, between them they have somewhere around $79 billion. That's a lot of money coming into commodities that before we were quiet little backwater and people didn't get so interested in soft commodities. Well, they're interested now. They're interested in how we're going to feed people in the future. They're interested in the feed versus food versus fuel. And they're interested in the link and the correlation and decorrelation versus other markets. So there's a lot of money coming in and out at certain times, which is giving us this much higher volatility. That is likely to continue, may even get more extreme. So we are not going to go back to days of price of wheat and you could sell it whenever you liked and it would be much the same. That is something that for the future we're going to have to manage. And to be competitive as an industry here, we are going to have to help the growers do a better job about managing that price volatility. This chart is a chart about food security, because it's a chart about agricultural land from the 1970s through to 2012 for oilseeds, rice, and grains. And what you can see is that actually we have added land. There are a lot of people who tend to assume that as we've grown cities, we've actually reduced agricultural land and all the growth in production has come from yield. Most of the increase in production has come from yield, but we have actually added about 9%. But that's pretty small when you're going back to the 1970s. There is more land available worldwide, but a lot of it is in places like the Amazon rainforest or in countries in Africa which today have very unstable political environments. And so when you look at what's really available today, that it's acceptable to use and competitive to use, it's pretty limited. What that means is that the countries that have growing populations and/or growing wealth are unable largely to increase their own production of food and become self-sufficient. And that's where you start to hear so much about food security. How can we make sure that we can feed the people in our country? And so places like China or the Middle East, the ones who are really deficit of production, start to get interested in either owning land or owning the supply chain. And it's understandable why they feel the need to do that, because they want to make sure that governments might not come in and suddenly change the rules of the game on exports and imports. Because what we saw in 2008 when we had the first real spike on prices was that a lot of governments and a lot of countries said, okay, Russia, we're going to ban exports. Places like Egypt said, no, we're going to fix the price. And so it didn't allow market economics to work to make sure that we grew the right things in the right countries. And so, understandably, some countries that are deficit, and Australia is very lucky to be surplus, but the countries who are deficit get nervous. One of the answers, I think, and I think the most important answer to this really is around building trust and free trade. Now, the free trade is the job largely of governments, but I don't want to make this slide about the burden only on governments, because I think private companies such as Cargill also have a very important role here. And so we do spend time talking to governments and trying to explain where free trade agreements can add benefits. And I think we also have a very important role in this word trust. So building trusting relationships with the companies who are importing in countries like Indonesia or China or the Middle East, to make sure that they feel confident that they will have access to the food commodities that they want to import. Because that's the way I think that we can avoid some of it becoming very political and making sure that really the farmers grow what they're best suited to grow, and then we ship it to the places that need to import it. The step beyond basic food security, so just making sure that people have access to enough food to eat, one level up for that is to make sure it's safe, but the next level up for that is to make sure that it's healthy and sustainable. And these are trends that are starting now, and I think are going to get bigger and bigger and bigger. And so when people start to think about their food, they actually want it to do something for them. They don't really want to have to go on a diet. They actually want to eat something that makes them healthier. So it's got to be heart healthy, it's got to reduce cholesterol, it's got to give them the right vitamins. There are actually, when I was living in the US back in a few years ago, and you can buy bread in the US that's specifically targeted at a gender and an age range. And so it's bread designed for women in their 40s or men in their 30s, and they put specific vitamins or types of flour into it. Now, whether that's the trend of the future or not, I don't know, but it was interesting to me that could be the kind of trend that we're going to start to see in other places going forward, because people are increasingly interested about making food that does the work for them so they don't have to try. They also want it to be produced in a responsible and sustainable manner, and so it starts with the NGOs, but you start to see a lot more people asking questions about how much water is being used, how it's been produced, where the land is. And I think, as we start to see more people coming into the middle class, and so worldwide there are 70 million people, they estimate, every year that move from being poor into the middle class. Also, as you see, an aging population. And so that aging population also have more demands out of their food and want to make sure that it continues to keep them healthy. And by the way, this isn't just Australia or the US or Europe. It's also, you start to see this in places like Japan, obviously, which has an aging population, but also in China. And there, obesity has doubled in the last few years. So there are still people who aren't getting enough food, but it's an increasingly small minority. But obesity has doubled, and so this issue of obesity and eating the right food starts to become a much bigger one. And so the countries that are going to be competitive in their production going forward have to bear this in mind, have to make sure that we're producing the right things that fit the trends on what people are going to eat going forward. And so one of the things that we do is spend a lot of time talking to customers in the Middle East, Asia, Europe, all the places that we're exporting grain to, and making sure that we're understanding what the trends are, trying to pick up them as leading indicators rather than lagging. And then I think one of the jobs that we have as companies like Cargill is to come back to growers and explain what we need to be growing for the future, because it is changing and people are asking a lot more out of their food. I'm not going to talk about technology because you've had all the experts today talking to you about it, but really what I'd like to do at this point is just applaud, I think, the people who organised this conference. There's been a lot of sessions I've seen on the agenda today about using and adopting technology, about understanding all the ways that we can improve productivity, and I think those are a critical part about staying competitive. I thought it was interesting that Mick Fells won that, the award for the application, which was around changing the way information is shared and used, and I think that's one of the things that has been a critical part of what we've changed over the last few years, and that speed of technology continues to go extremely fast, and so I think that the more that we can help people adopt that, because as another speaker also said this morning, it's not just having new ways of doing things, it's making sure that they're adopted, and so that technology. And so I think everyone being open to that and trying to find out what's out there and the best way of doing things is also a very important part of the profitability and the competitiveness. So if we sum up some of the key factors around future competitiveness, well, it's around Asia living up to its growth. I mean, it very clearly is moving there, but the speed at which it happens, we need to keep monitoring. These efficient and effective supply chains, adopting this new technology, free trade and trusting relationships, meeting food safety requirements, because as we've all seen, one problem and your reputation goes down the drain. And so a lot of people in Europe who are producing beef products and have now found they had horse meat in them, their reputation is going to take years to recover. The same when you have an incidence of mad cow, avian flu, whatever it is. When you have food safety problems, it takes years to come back. And so as an industry, we also need to make very sure that we're living up to that. Listening to and meeting these changing consumer needs that I talked about, and then good price risk management. So those are my key factors around future competitiveness. I was actually also asked just to do a couple of words on Cargill and what we're doing in Australia and why we're here and the opportunities that we see. And so We've actually been here a lot longer than some of you might recognise. We've been here for 45 years, mainly based on the East Coast. And so when Cargill was set up in Australia, it was as a domestic oilseed processor. And so we've had various crush plants all the time. At the moment, we have 3 that are capable of processing canola and cotton and sunflower and a little bit of soybeans as well. We also have been in the grain trade for all that time, have got much bigger after the acquisition of AWB in 2011, which gave us the storage and handling capabilities. We also have a vegetable oil refinery. We've taken over the pool management, obviously, with AWB. We've also in the cotton business, food ingredients, risk management, and have got JVs in flour milling, beef, and land management. So across a fair variety of agribusiness, when you hear about multinationals doing business here and people worry about have they really got my interests at heart. And I think one of the things that I would like, one of the messages I want to send is when I talked about trust, that's the trust with the buyers at the destination, but it also has to be with the growers here. And actually how we see our role is making sure that the countries with surplus, we make sure we connect them with their best buyers for what they have to export. And so we have people on the ground in all of these South Asian countries, China and Japan, Philippines, Indonesia, people on the ground, local people speaking those languages, really understanding how the flour milling works, really understanding how animal feed or whatever the industry would be works. We've got a dedicated team for Mideast as well. And I think what that does help us do is really understand where the demand's coming from, who wants to buy what they're wanting to do with it. And that was one of the advantages of us taking on AWB as well. We got an awful lot of experience about milling Australian wheat and really understanding what the customers at destination are trying to do with it. And I think that's a real advantage that we can offer at the moment.
Well done. Thank you, Phillipa.
Hello, I'm Sheila Charlesworth from Ming and Urban Group. I just wanted to ask who is the most competitive operation in the world for transporting and the lowest costs, and what was the percentage drop within, say, 5 years, and what difference it made to the increase in their bottom line?
It's not an easy answer to that, but I think one of the countries that I would point you towards is Argentina. And so Argentina, at the time that I was living there in the late 1990s, had a soybeans crop of 18 million tonnes. It's more than tripled that now. It's also grown the corn and hasn't really lost much out on wheat. And so they've been able to take land that was already there. They didn't cut down the rainforest, but they've been able to grow it and do an incredibly efficient job of exporting it, because Argentina is similar to Australia, that it really has quite a small domestic demand relative to what they're capable of growing, and so is really export focused. And they do a fantastic job about getting it to the port, getting it on ports, from ports onto ships at relatively low prices. The reason that I would be hesitant to call out Argentina as the great country to look at is because of the political interference. And so when it comes to, I wouldn't call it red tape, it really is political interference. There's been export taxes which change from one day to another. They're retroactive. They're export quotas. They change the energy prices. It is a very, very difficult environment to do business in. But nonetheless, when you look at production costs, they're very, very efficient. It is also, and not surprisingly, the net result of that is that land prices are quite high in Argentina now. And so that also, it's not a surprise that when you become more efficient that the land prices go up relative to Australia, for example. I would also highlight the US actually is pretty efficient. Now they've got the Mississippi River, and that does help because you can stick things on a barge and you can bring it down the river to the Gulf. And so some of it depends what nature gives you. But those would be two countries to look at as an example.
Just quickly, you touched on the issue of port access in Australia, and I guess you're sort of alluding to limitations. Would you like to elaborate on that a bit, please?
So port access in Australia is somewhat unique. I've worked in many countries and I've never seen a port access system like this, partly because there are 3 regional, essentially, monopolies, and partly because it's been in the process of going through deregulation. I think the problem that we have is that the industry, the bulk handlers and the ACCC have tried to find something that is fair and competitive. So to make sure that everyone gets access, what's happened is that everyone's found it extremely hard to actually find a working solution to that. And so there have been auction systems, there's been these first in, best dressed, but there's no commercial negotiation allowed. And so what you end up with is systems that aren't particularly good at allocating shipping slots, very inflexible for them to use them, and so when things happen that you can't change it. And so certainly one of the answers that we are keen on is baseload or these long-term agreements, but with some flexibility to be able to move things as and where it makes sense for both the port bulk handlers and for the user, to give a bit more flexibility, because otherwise you end up with people paying large amount for a shipping slot. You can end up with the wrong grain in the wrong place to be able to fill it, and a very, very high cost because of the take or pay. And then the market can get distorted in both directions, and people are forced to maybe sell a destination too cheap or do things, and it makes the market very hard to handle. So there isn't any great answer, but I think long-term agreements and, as far as possible, commercial negotiation, I think, are 2 of the answers.
You touched on Indonesia as one of our major grain markets. The beef industry, we've had a lot of loss of trust, which you spoke about in that industry, and I'm just curious to know, has our grains industry been affected by that, and how your dealings with Indonesia go?
I don't think the grain industry has been directly impacted, insofar as the people who are the millers there don't tend to be in the beef business. Nonetheless, at a government level, I think for sure there has been an impact. And so when Indonesia looks towards Australia, I'm not sure it sees a country that it can always depend on to be reliable in the way that trade terms are handled. And so we've continued to ship as much grain to Indonesia as before. But I would imagine some of those government ministers, and I'm making an assumption here, there's nothing I've read, but I would have to believe that at a government level there would be a little bit more concern about that being an ongoing flow.
Mike Ewing, DAFWA GRDC. I'm interested in your comments about quality directions. Do you think that those quality shifts are going to be accompanied by strong price signals?
They have to be. That's the only way it works. So, yes. Short answer.
My question is along the same line as Mike. We talk about bulk commodity being exported from Australia. You gave some example of functional food and so on. How do we translate that to the grower's pocket?
Well, I don't have a short answer to that one. You know, when I was putting this together and we were talking about, and so you can see I talked about a number of factornesses about the competitiveness, and for sure there is no doubt that Australia can continue to grow and export wheat and be competitive. It's really, in essence, the title of the presentation was wrong. It's more about how we can help growers be more profitable doing that. And I think to do that, we all need together to work as an industry. So part of it is about making sure that the growers can do the work around the productivity, around the adoption of technology. In some cases, you know, working with the bulk handlers and understanding the storage arrangements or the port access and getting involved in some of that, because some of that is appropriate. It's up to our job in the agribusiness side to make sure that we're working with the governments for them to understand, making sure that we're explaining to you what you need to grow. And so I think there are an awful lot of strands to it. There's no one answer, no short answer to that.
You touched on really that changing dynamics in Asia of the shift to the middle class. And a lot of that demands shifting to more animal proteins, meat, milk, or that which is going to put a big demand more on feed grains. Yet we're very focused on the premium sort of milling sort of sector. Or that just your thoughts? Should we be looking more at the feed area rather than just focused on milling grades?
Anybody want to grow corn? For sure, part of that change in diet is about more meat, and that does bring in demand for corn and for feed wheat. But it does also actually mean more bread and more baked goods. And so I think someone also already brought up this morning that the consumption of rice is actually going down as some of those diets change. And so for sure, part of it actually is about milling wheat. There is going to be demand for feed grains. In many cases, I'm a big believer that people should grow what they're best suited to growing. I think there are other places who can probably grow the feed grains, and I'd focus on the high end where we can grow it, because I think we'll get a better return, and that demand certainly is increasing. And there's a lot of focus on China. I like talking about Indonesia because I think Indonesia's been a little bit forgotten. But you can bring out Indonesia, Myanmar, Vietnam. I think some of those Southeast Asian countries, there's a big demand for flour and baked goods going forward, so that's part of it as well.
Thank you. Everyone more. Yeah.
Harry Streck with Bear Crop Science. You mentioned that Australia could use more rail, more infrastructure there. You mentioned that the quality of the wheat is very high and you need to maintain that. But what other areas of innovation do you see that could really help?
Well, so some of that I'm probably not the best person to ask. I think if you look at the agenda today and you look at some of that, and so you looked at around pest management, weed management, and all these things, I think all of those, I think the short answer is I think we need innovation across all areas. And so precision farming, agronomy, I think those are part of the answers where we need more innovation. Some of those will be specific to Australia, some of them will be more global. I think the thing that we can really control in Australia is some of the infrastructure, because that is local and that is in our hands. One of the biggest things we talked about is the Australian dollar. Well, with the best will in the world, even if the government wanted to, it really couldn't change that tomorrow. And so I think there are a lot of strands of answer to that question, but I would guess that farm management and supply chain are two of the ones that and listening to our customers and picking up those leading indicators are the ones that we are most able to do something about directly.